According to Wikipedia, there are 13 categories of taxation at both a federal and state level within Australia. One of these categories is property tax, and property tax is built up of lots of other taxes. One of them within the property category is land tax, and this is a good one to learn about that you can store in the back of your mind for future reference as you start to build your wealth and potentially start to invest in property. Welcome back to my channel. My name is Reese, and in today's video I'm going to be explaining what land tax is, how it's calculated, and in what circumstances you would need to pay it. The government claims that land tax revenue helps to provide public services such as education, health, and public safety. I, on the other hand, think that's a load of crap. I believe that land tax was put in place by the government to slow down investors from building sizable portfolios of investment properties. Land tax is levied every single year for property that you own, meaning you have to make a payment each year based on the rates that they charge. The amount that you will be required to pay will differ depending on the state or territory that you live in, and just note that the Northern Territory has no land tax whatsoever. To cover all of my bases in simple terms, it is a tax that is charged on land that you either own outright, co-own, or have a mortgage on. The amounts differ depending on where you live. As a reference, I have linked to each of the states and territories' revenue offices for the page of land tax. So when I do eventually get to an example, if you are in a different state to South Australia, because that's where I live and I'm going to use that as an example, you can follow along exactly the same through that revenue office. So to be clear, land tax includes a wide variety of property. It includes any type of property realistically with land value. So we're talking empty blocks of land with houses on it, units on it, townhouses on it, apartments on it. If you live in a high-rise building with an apartment, you may also be subject to pay land tax based on the number of properties in the actual building itself and where the building was built. One little win is that your principal place of residence or the home that you live in is exempt from land tax. So if you have like 10 hectares of land, but it's where you live, it's your home, you will be exempt from having to pay land tax on that land. And just note that it's usually levied towards the end of the financial year, depending on what state you're in. All right, so how is land tax assessed, and how could you fall into the boat of being someone who actually has to pay land tax? The way it is calculated is by assessing the value of the unimproved property that you own. This is actually quite important to understand, because what is meant by unimproved value is its market value under normal sales conditions, and it assumes that no structural improvements have ever been made to the property. So then the amount that you will be required to pay will only be calculated once the value of your land exceeds a certain threshold. As an example, here in South Australia, for the financial year of 2020 to 2021, that value is $450,000. Once the value of unimproved property exceeds that threshold, you will then be charged a base sum plus a dollar or percentage based on every dollar of value that your property is above that threshold. Here are the general rates for South Australia during the 2020 to 2021 financial year as an example. As you can see, there is no land tax owed for property valued under $450,000, and then it goes into a bracket system. Depending on where you live, check your revenue office rates for land tax using the links I have provided below. This is why it's worth understanding what land tax is and how it's calculated, because it may alter your plans to eventually own 19 investment properties. It could be the difference between you having to pay a couple of $100s in land tax or tens of thousands. It's the type of thing that you should understand before getting involved into the market, because it could be something that you could be caught out by. It's important to understand. I hope that I've kind of push that on you now. Land is typically valued by your local council, and you can actually see the value of that valuation on your council rate forms. I have made a video in the past talking about what council rates are, and I have linked it in the description below if you're interested. Now, there are some other exemptions other than your own house being your principal place of residence, which would see you not having to pay land tax on that property. Each state is different, and I encourage you to do your own research through your own revenue offices, but some examples that you will likely see across multiple states include: so like I said earlier, if your house was already exempt because it was a principal place of residence, meaning it's your owner-occupied home, you will be exempt from having to pay land tax on that property. If you have a grandparent living in a house and then they pass away, they also will be exempt from paying land tax when you, the child, inherits that house and then goes to sell it. Just note that in that instance, if the estate needs to be finalized and basically you need to sell off the property and stuff like that, it takes time, and you can be exempt from having to pay land tax for up to 1 year Again, check where you live, but that's another thing just to keep in mind, that the exemption doesn't last forever just because they lived in it their whole lives. At some point, you may be liable for land tax in that instance. Another exemption which could be applied to your situation is if you decide to undertake serious renovations or even knock down and rebuild your house, you will probably fall into the category of being able to have an exemption for up to 2 years while that process takes place. If your house is destroyed by something like burning down in a fire, which would absolutely be a shame, again though the same thing, you can actually be exempt for up to 3 years while you go through the process of rebuilding or figuring out what you're going to do with that land. Like I said, these are just some examples. There are many more listed on each of the revenue websites. I encourage you to have a look through them for these exemptions. Just a quick side note, and I don't really think this will apply to many people who watch these types of videos because they probably should already know this, but any land held under a trust is assessed a little bit differently, and it's actually a little bit more expensive if you're paying land tax under or where the property lives under a trust. So just keep that in mind as well. If you have property under a trust, that you should definitely do your research again, because it will be slightly different to the rates that I've shown in this example. Just as a quick side note, if you own land and it's held under a trust, it will be assessed a little bit differently to how it would be assessed through not a trust. So land that I own is not under a trust, it's at a different rate. Land that falls under a trust is assessed at a higher rate, so be wary of that if this is applicable to you at all. Another thing to understand, and this is an important one as well, is when you go to buy a property, your conveyancer may suggest that you get what's called a land clearance certificate. You need to apply for one, and that process can be done through your conveyancer. They can do that for you, but understand what it is. And it's, long story short, if the land or property you're buying has land tax owed on that from the previous owner and you take ownership, that owed money could potentially fall on you. So a land clearance certificate is put in place to make it so they need to pay that, not you, when you take ownership of the property. That's a good one to keep in mind. And finally, to wrap this video up, each revenue office will have a calculator that you can put in some parameters about the land you own and the value of it, and it should be able to spit out a rough estimate of how much land tax you would be required to pay based on the portfolio that you've built. As you build your wealth over the years, land tax will be an important consideration that you need to take into account when looking at building a portfolio surrounding property. I hope you learned something in today's video. I hope that it was insightful, and I hope that you got something out of it. If you did, please consider liking and subscribing. It really does help the channel grow. And as always, I will see you in the next one.